Hello and welcome to Moneyweave Academy Spotlight, our online podcast series featuring top experts on women and money. I'm Mary Quist-Newens, founder, executive director, and chair of Moneyweave Academy. For those of you who are new to us, we are a nonprofit with the vision to enhance the financial literacy and therefore the economic security of American women and girls. How will we do that? We'll do that through our mission of delivering trustworthy, holistic, and competent financial planning education that inspires purposeful action, sound decision-making, and philanthropy. Today, we have a super important topic of interest to all women and investing, what you need to know right now. Here's why this topic is so important and so timely, so now. According to a recent study by Fidelity Investments, 67% of women are investing both inside and outside of their retirement accounts, more than ever before. And yet just 1 in 3 say they feel confident about investing. That's a huge gap, and we want to address that today. Joining me today is my fabulous co-host, my friend, a successful business owner, Regina Barr. Regina is the CEO of Red Ladder and Women at the Top, and she's just a dear friend. And she's also on the Moneyweave Academy board, which makes me glad every day. Welcome, Regina. Good to have you with us.
Thanks, Mary. I'm so excited to be here as always.
It's great to have you here again. And Regina and I are so happy to cast our spotlight today on certified financial planner and money expert, Kathy Longo. Welcome, Kathy. Let me tell you a little bit about Kathy. She's really remarkable. She and I met maybe 10 years ago when I moved to Minneapolis, and I was doing informational interviews with some of the top financial planners in the cities, and I came across Kathy, and we've been friends ever since. And she's such an inspiration, and she's such an expert. I'm really happy that she's joining us today. Let me tell you a little bit more about her. She has over 25 years of financial planning experience, and she's still 12 years old. I don't know how that happens, but she looks fantastic. She enjoys making simple concepts out of something that's very complicated. So she likes to distill things down to their lowest common denominator and make them simple to understand, which is great for us. And she also is really committed to helping her clients live a better life. As a leader in her field, Kathy has earned advanced financial planning and divorce designations, which further add value to her clients. And she gives of her time and talent with local and national boards, just like Moneyweave. Her company, Flourish Wealth Management, is a registered investment advisor and is the realization of her dream to help make her clients' lives better. She recently made her debut as an author. Yay, that's laudable. And her book is called Flourish Financially, Values, Transitions, and Big Conversations. I love that. I know it's a wonderful book. So welcome, Kathy, and we are looking forward to having you tell us more about women in investing.
Thanks. I'm looking forward to our conversation today.
It's going to be a great one. So let's go ahead and get started. You know, Kathy, we've talked about this. There's so many studies on women and wealth, when we've posted a few on the Moneyweave Academy website. And when it comes to investing, one of those most well-known is that women tend to be less confident, more cautious about investing than our men. So I'm curious to know, in your practice and your experience, you've worked with a lot of people, what do these studies tell us about women and investing?
I think there's a lot to learn from the studies, and I'll highlight 2 studies today. One is the one that you mentioned, which is the Fidelity one. Both of these are studies that came out this year. The Fidelity one really speaks to women as investors, and then the other one that I'll highlight really speaks to women deferring decisions to their partner. So a couple of things in that Fidelity survey, they identified that women earn on average of about 0.4% more per year on their investments versus the male counterparts. So that doesn't sound like a lot in just like 1 year, but if you compound that every single year, that really adds up. So year over year, women are better investors. And then when you dig into those results, you start to say, well, why is that? And it's one of the things that we see is men are overconfident. We talk about women not having that confidence, but men can be overconfident, which can lead to some rash, quick decisions on their buys, their sells. They buy and sell way too much. Really, that approach where you stay disciplined with your strategy can lead to better investment results. So I think that's one of the key pieces to think about with the investments. And also highlighted a key piece that about 1/3 of the women felt confident in their investment decisions. Also, only 14% of the women said they knew a lot about saving and investing. So there's a lot of opportunity when we just think about investing. But the other one that I think is a key piece for women, it was from a UBS study. They looked at how women defer to their counterparts or their spouses in making decisions. And even though when they looked at this, it was called UBS Own Your Own Worth, 82% of women and 74% of men, they believe that there should be equal participation. But when it comes down to it, 49% let their spouse take the lead on these financial decisions. This wasn't just like across like older people, this was across all education levels, age, and breadwinner status. So I think all of that said, we have tremendous opportunity here.
That's unbelievable. And I had to chuckle when you mentioned, Kathy, about the men, because literally my husband will tell me, my 401k is going down. And I think if he didn't have me saying, settle down, you don't need to be looking at it every day or even every week, we're in this for the long term, I think he would be one of those guys making those irrational, riskier trading on a regular basis. That's really fascinating to hear that they're overconfident. We look at women and say they're not as confident because we're comparing it to that overconfidence.
There's a really interesting study. One of the leaders in behavioral finance, Dr. Daniel Kahneman, has done the only study on gender differences that I'm aware of. And he did identify overconfidence bias as a really jumping into things without having all the data behind you. And men are more likely to be overconfident, as we said, and some of this is believed to be fueled by testosterone. And there's been a large academic study that affirms what Fidelity learned in terms of how women outperform.
When we think about that confidence, like with investing, we don't have to know 100% to be able to be good investors. I'm a financial planner and I work in investments every day, and I do not know 100% of what's out there.
You make an important point, right? Those of us who are not in the financial services industry or are not financial planners, there are qualified people that we can work with. I always like to tell people, I feel like I have this conversation with my mom all the time, that when you hire someone with the expertise, you're making an investment in yourself. And I wish, quite frankly, that more women would view it that way. One thing I would tell you, I think women are more intentional in what they do. So I want to shift our conversation for a moment and talk a little bit about your backstory, about your book or your business. And I do love the name of your business, and I'm sure that it was very intentional. And I'd love to hear the backstory behind that name, Flourish Wealth Management.
Well, thanks for the compliment there. And I love it too. It was such a big decision. I felt like it was like naming my fourth child. I have 3 real children, although Flourish would probably be my 4th child. When I thought about the name of the company, I really wanted to create a new experience, like more of a feeling when it came to finances, especially with women, where we could just change the conversations around money and create new possibilities. And I think that when women gain confidence, they can flourish when it comes to their finances. When I came across that name, that is it. That's the feeling I want to create for women and for all people with their finances.
That's wonderful. And I will just tell you as a woman that it did resonate with me. And I think it's one that would resonate with most women. So with that, we know that the pandemic has led a lot of women to become more interested in investing. And you and Mary both referred to that. But I think there's still lots of women who aren't doing it. Tell us a little bit about, from your perspective, what gets in the way of women and investing?
Let's start with the jargon. Alpha, beta, Sharpe ratio. You look at any of those terms that you might come across and you're like, no, thank you. But the truth is, if we can get past the jargon, we really don't even need any of that. There's so much to make it more approachable and move past that. And even in like listening and finding resources, find resources that make it easy to understand. I don't think the financial profession is really focused on what women want to talk about. So the numbers are definitely important, but it really needs to start with the goals and understanding the values and the whole purpose. And so if we can start there, then we can tie in the investment pieces, and then it feels just so much better. I think women have fears and emotions that can get in the way and be paralyzing to start with investing. And then I think not talking about money enough. It's like a taboo topic. So we don't talk about it growing up. We don't learn it in school. And this really contributes to our lack of knowledge and confidence. So there's just so much that gets in the way that are barriers that we can like move past them.
I'm chuckling when you said the piece about talking about money. And then I'll mention that to women sometimes and they'll say to me, well, I don't really have a problem talking about money. And I'm like, oh, really? Tell me, how much money do you make? And then it's like, oh my gosh, you wouldn't believe the reaction that you get, because I do think we are culturalized not to speak about money. And I know, Mary, you have done so much research in that area. So I'm going to pitch it back over to you.
So we always like to say there's no shame, there's no guilt, there's no judgment when it comes to learning about money. And one of the things I really love that you said, Kathy, is that when you invest with purpose and you put that plan in place, that really helps to reduce the anxiety because you know what you've got a direction for where you're headed. We talked about this lack of confidence. Tell us some key investment concepts that everyone should know.
Well, I think like when we start to think about investment concepts, it really starts with what the goals are and the reasons why you are investing. Is it to save up money for a down payment on a house? Is it to retire? Is it to send your kids to school? And one of the concepts is risk and return and how they work together, and how time frame for our goals is really important. We're retiring 30 years into the future. And it's not just about that retirement date. That money has to last until the end of your life, for many well into their 90s. So when we think about time frame, we have to think about having some risk in our portfolio to make sure that we have the money to last for our lifetime. Other kind of concepts to think about with investments is diversification, understanding the costs. I think sometimes people don't understand what they're investing in. And if it's so complicated that you don't understand it, and if it has so many expenses, that should be a red flag that maybe that's not the right investment for you. So that's just a couple investment concepts. There's more that we can build upon.
We'll build more in the class where you have a full hour to explain different investment concepts, and I know it's going to be great. We're talking about the differences between men and women when it comes to investing, and I'm sure you work with a lot of couples. And sometimes the husband or the man can be on one side and the female can be on the other side in terms of their risk tolerance. So how do you address that in your practice?
I think when we start again with that foundational work, before we even get to what the investment strategy, what we're going to do in terms of like how much risk in the portfolio, I think it's important to have regular meetings to sit down and have conversations. I think monthly is a great plan. I also think for couples, understanding each other's money history really comes into play. I think about an example of a woman and her parents, they had their own business and they put like all of their money into it and did some other like private investment, but they lost it all. And so for her, like her experience growing up with money was like, don't invest in companies, and that is risky. He had more financial knowledge growing up and more diversification and retirement accounts and maybe more of the traditional investing. And so it's really this opportunity to come together, but they had very different histories. And once you start to dig into that, you understood why she had such low risk tolerance and didn't want to do any stock investing. Then with couples getting organized, like listing out all their accounts, like their checking, their savings, their taxable, their retirement, all of their liabilities, we call that the net worth. But then with investing, you have to kind of bring it down a little further. You have to find out how each account is invested, how much is in stocks, how much is in bonds, how much is in cash. And you see like a huge chunk sitting in a savings account. It's not for the emergency fund. What is the purpose for that? I think like getting organizing, laying all that out can help identify some potential opportunities to invest. This is the first time they've looked at their 401k plans together, and one is investing in the money market, or really not investing, it's just sitting in the money market account. The other one is in 100% emerging markets. Well, their investment strategy is not aligned together. So I think that's that opportunity just to get organized, look at the accounts, drill in, figure out what's happening, then go back to the goals, thinking about what the purpose of each of the accounts are. You can hopefully come together. This is our long-term retirement. We agree to take more risk here. This is the safety net. We'll keep this in cash. And we can see them come together a little bit more on the risk tolerance. Like in marriage, the word compromise is going to have to come in, and we're going to have to like figure out the balance between the two of them. And in many cases, like there may be this opportunity to bring in some outside expertise, whether it's just sitting down for a few meetings or a longer term relationship to like help balance out what feels good for both people.
So Kathy, we've talked a little bit about earlier when you mentioned that women often allow their partner or spouse to take the lead. Now we talked about bringing them together and compromising. I like that word. There are also women who do take the lead and they move forward with investing, but they sometimes run into trouble. What are some of the mistakes you see being made when it comes to investing that way?
I think that women can get into trouble with their investments when they think they have to be the expert in the numbers. They avoid making decisions when they overthink their investment plan, or they just end up too conservative in their decisions. I think the mistake is deferring to somebody else for their investment decisions and the opportunity in learning about investments. 8 in 10 women will end up managing their finances alone. It could be due to a divorce or due to a death, women living longer, but there's a good likelihood that women will be managing their finances. And so the mistake is not learning it early, because when you have such a situation like divorce or death, those transitions are stressful in themselves. And then having to add on this learning curve at that point, that's hard.
And here's what I would say for people that are watching today. It's never too late to learn either. I always tell people, just start where you're at and it hopefully will all be okay. Education is critical. That brings me to my next question. Over the past year, I think we can all relate that it's been tough for many. And we have seen an increased interest in investing for women during this time. Yay, right?
Hey.
How has COVID-19 impacted women and investing and their financial position?
They talk about the she session, like it's been harder for women, and some of it depends on like the industry that they're in, the hospitality and travel industry, which can be more women led, or even women of color, and that just being hit harder. The challenges we've had from either lack of childcare or needing to stay home, or kids being home, and women earning less than men. So it was the woman who was the one that decided would stay home, caring for parents, so needing to care for them and not give them exposure. So all of those, on top of like all those other stats of us being paid less, living longer, it just creates more challenges to our financial resources. Being out of the workforce is like one less year contributing to our Social Security.
What you're describing really is why Moneyweave exists, born out of the pandemic. We have a mission to address some of these gaps that you see that really endanger people's lives. The labor force participation of women is the lowest it's been in decades. And when you look at the lifetime earnings gap, the Institute for Women's Policy Research says that millennial women on the current course will earn about $1 million less than their male cohorts. It's really important that we do take control of our finances. I am so glad that you're going to be coming and joining us and teaching the class on January 18th. Everybody mark your calendar today. That's a Tuesday, January 18th. I'll tell you a little bit more about the details. Women and investing, what you need to know right now. So what can we expect from your class, and why should people come?
The class is going to be approachable and fun. I will make sure of that. And then we're going to build on the foundations needed for investing. We'll understand the role of emotions when it comes to investing, along with any other barriers that we have to consider, how to focus on what you can control, and we'll let go of the rest. And then we're going to learn some key concepts, like why it is almost impossible to outguess the market, how you can simplify and let the markets work for you, learn what diversification really means, and how missing the top 10 market performance days over a 20-year period means you will lose half of the investment return. After I show you this slide, you will be like, I am staying invested. And then we're going to talk about an area that we've seen a lot of interest in, which is environmental social governance investing, where you can align your values around your investment strategy. So we'll do some introduction in that area too. But overall, my goal is to create new excitement around investing and align that investing with your goals.
That's great. And I have to tell you, I think we've talked about some things today and some statistics and things that could be scary to women. So I think we've had a great conversation, and I really want to leave this podcast on an upbeat note, if you will. So as we're winding down on our time, and before we actually go today, what would be one piece of advice that you could offer about investing, especially for our busy working women that are out there?
Making it fun and manageable. Start talking about money with your partners, friends. It's really an investment in yourself more than anything else.
Love that. Thank you.
Education is the one thing no one can take away from you. I was taught early on, and boy, has that paid off. And so we're all about great education, just like we'll see with Kathy in her class on January. Well, this concludes our interview today. Thanks, Regina and Kathy. So great to have you with us. And Kathy, you've given us a lot to think about, and I can't wait for your class. So you can learn more about Kathy at her website at flourishwealthmanagement.com. And please join us on Tuesday, January 18th at 1 p.m. Central for Kathy's live online class, Women in Investing, What You Need to Know Right Now. You won't want to miss this. At Moneyweave Academy, we're committed to helping you achieve greater financial security, confidence, clarity, and control. So check out our website for our podcasts, upcoming classes, free workbooks, calculators, and so much more. Thanks for joining us today, and be well.